Hey everyone, and welcome to Earnings Cheat Sheet for Friday, February 13th. It's Alexis Garcia and Ed Carson here, and we'll be taking a look at some key upcoming earnings reports to help you prepare for the week ahead. So, Ed, lucky Friday the 13th here. What do you have on tap for us today?
Yeah, I want to take a look at one of the best stocks right now. It's Walmart, as well as Quanta Services and Guardant Health.
All right, well, let's start with Walmart, which is scheduled to announce Q4 earnings on Thursday, February 19th. Earnings for the retailer are projected to rise 11% to 73 cents per share, while revenue is expected to climb 5.5% to $190.43 billion. And here's why we're watching Walmart. We'll be looking for commentary about customer spending and same store sales growth. And we'll also want to hear more about their AI initiatives and plans. And Ed, Wall Street is expecting a strong holiday quarter, and Walmart are really teaming up with this AI kind of platform here to really drive some more of these sales. They've got partnerships with Google's Gemini and OpenAI's Chat GPT. And this will also be the first earnings call with the new CEO. So, what do you expect here with Walmart?
Yeah, this is you know, doing better. We're seeing a little bit pickup in growth. Want to see if, we can generate sort of the higher single digit growth maybe in like the next fiscal year, which has already started. Supposed to be double digit growth for earnings. I mean, low double digit, but so obviously it needs to do that. It needs to, because I think people are built in some pretty high expectations actually on this name. But yeah, I want to see that they are still that consumer spending, e-commerce. I mean, they become a real competitor to Amazon. We don't talk about it as much, honestly, because Amazon doesn't care as much about e-commerce. I mean, they're doing other things, but it's a really big player in that whole space. So they've had a lot of things working right, and just want to see if that's continuing.
Right. And we can look here on the daily chart, Ed. And as you mentioned, this being one of the best stocks in the market right now, I'm not sure what that's saying about the market, but we saw Walmart break out of this flat base area, the 109.58 pivot point there on November 26th. Pretty much respected the 21-day line. It had a couple tests of that key moving average, but it's in a profit taking zone now. If you bought at that breakout, it's also broken above some recent ranges here, Ed. So, again, tell me your thoughts about the chart and potentially what could set up here and how would you manage this?
Yeah, I mean, obviously, people who bought on the breakout have a big cushion, but it is a profit taking zone. And honestly, one of the things about a profit taking zone that can be interesting is that sometimes it lines up with the earnings cycle. Like, it just sort of, oh, wait a second. So, you know, you don't have to sell, or you could sell some. It just sort of depends on how you feel about it, what your conviction is on this name. Can this continue to move higher? The relative strength line has been going well. Again, the numbers have been improving, sort of marginally, but they have been improving fundamentally. It does give me a little pause. It is actually fairly expensive for a slow growth company. The PE is a little high. I know we don't talk about valuations too much, but it is relatively high. Forward looking basis, it's much more expensive than a company like NVIDIA. So which one do you really want to have? That's the thing. But the fact is that Walmart has been outperforming NVIDIA for the last several months. So these things can happen. Costco did that for quite a while. I mean, they had a little stronger growth, but cost for a long time, Costco richly, richly valued, and it kept working. So it doesn't mean it has to stop. But I don't see what you can do for buying this. It's up to you on what you do with Walmart. I mean, you can hold it, or you can take some partial profits, say heading into earnings if you have a decent cushion. But, it's been really doing well.
Yeah, and I just want to switch over to the weekly chart here, just to get a little bit of a longer term view. In terms of fundamentals here, it has kind of a mediocre EPS rating, accumulation distribution rating, not too bad. Composite rating is at 80. So anything jumping out to you here in terms of fundamentals that you're paying attention to?
Yeah, I mean, there's one is that, if you scroll down, we're supposed to have that, faster EPS growth for this next quarter, the January quarter, and then it's another quarter. So it's supposed to be double digit growth. So that, I mean, it's not amazing, but when that's it has had these periods where it can do that, and it's actually just so gigantic to generate that growth is impressive. So if that's what can make it could go on runs. It did that in 2024. You can see how it sort of went on a run in 2024 when the growth picked up. And then it sort of went sideways in 2025 for most of the year when growth, you know, petered back down. And obviously there's other things going on. So that really is the key. So this isn't our earnings, but a couple of things that a couple of times sort of the up down volume ratio is a 1.9. That's extremely high. I mean, you can get higher, but anything over one is positive. So seeing a lot of strength there. And when it paused, it had the breakout, and then a couple of times it sort of came down to the 10-week line, had these mini consolidations. So those offered opportunities to buy or add some shares. So it's just doing everything. Right now everything is working quite well for this name.
All right, well, let's go ahead and move on to Guardant Health, which is expected to report Q4 earnings on Thursday, February 19th. Earnings for the cancer diagnostic firm are expected to be a loss of 76 cents versus 90 cents a year earlier, and revenue is projected to increase 35% to $271.8 million. And here's why we're watching Guardant Health. We'll be looking at those oncology test results, Ed. And, Guardant already released some preliminary Q4 results in January. So the surprise factor uh, on the top line here, maybe a little bit lower than usual, but we will be looking for confirmation of those oncology tests. I believe 79,000 was kind of the magic number investors were looking for. And again, Guardant Health, a lot of promise there, but I think the big knock here is that the company has yet to turn profitable. So thoughts here.
Yeah, that is an issue, and there's no real quick path to that changing. I mean, they're generating strong revenue growth, and eventually that might all turn, and that'll be exciting. But yeah, that is something to watch. And you say that the preliminary numbers, so want to look at the details, want to look at the guidance. Really a big move. The last earnings report. And it's held that gain. So that was really strong. It's been sort of choppy, but it's sort of choppy up from there. But the fact is, it's held that big gain since then. So, but yeah, want to see the strong revenue growth. It'd be great to see some path to profitability, but honestly, it looks for years to come that it's still going to be losing money, and that does make it riskier for investors.
And in terms of the chart here, Ed, you mentioned we saw this gap up of about 28% last earnings report. It formed a flat base with a 112.42 buy point. It peaked above that level on January 6th. Kind of had some chop coming out of that. But yeah, right now trading below the 50-day line. So, what do you do here with the technical action?
I mean, for recent buyers, they probably should have already been out. I mean, maybe you could do it if you bought on the gap up and you're still up. I mean, there would have been a lot of tests along the way, but you may still think about it because he could easily fall, 15, 20%, like that definitely is possible. So even for those and anybody who bought more recently, probably there were some sell signals in there. I mean, for whatever you did, early entries, breakouts, whatever. On the other hand, if this does make a powerful move above the 50-day line, maybe back above the old buy point, which is no longer valid, but you could sort of use it because it would sort of line up with a downward sloping trend line and what would be an emerging base. So if you drew a trend line from there, it sort of lines up with the old buy point. So you can sort of see, if there's that. So that would be something that could be actionable. Obviously, a lot of volatility out there, just not just with this name, but just in general with the market. But definitely been one that's been a strong name, and medicals can outperform. This is something that doesn't seem to be right now, quote unquote, just give it another day and we'll see. But AI disruption is not there, and medicals tend to do well in choppy markets because medical things still get paid for by the government or insurers. And not necessarily Guardant Health, but that often medicals do well in sort of in tricky market rallies.
Yeah, and we're going to switch over to the weekly here, Ed. And, we can see again a pretty weak EPS score, composition rating, mediocre, again, B minus for accumulation distribution. We are seeing some acceleration here in the earnings and a pretty strong sales figures here, Ed. But anything else jumping out to you?
It'd be nice to see if the sales growth could continue to accelerate. It's supposed to basically match, but another quarter of growth, of sales growth, I think is probably something that investors would like to see, given how, the big move it's made over the past year, in the past 3 months. But yeah, but solid fundamentals in terms of the revenue. Going to be a long. It seems like a long way for the earnings.
All right. Well, let's go ahead and move on to Quanta Services, which is also scheduled to report on Thursday, February 19th. The AI power play is expected to see Q4 earnings up 3% to 302 per share, and revenue is expected to rise 18% to $7.36 billion. And here's why we're watching Quanta Services. We'll be looking for information on the data center business. It's including data centers, AI power construction, and of course, any comments about reshoring of manufacturing, or maybe not. So, Ed, Quanta's really evolved from this traditional utility contractor into the picks and shovels play for AI data centers. I mean, this is a common story we're seeing across the board. But again, I think looking at the backlog here, I think that's going to be a key point also for investors. Seeing how much Quanta can convert this massive backlog that they have into actual revenue.
Yeah, and it does seem like beyond that, the other ultimate backdrop beyond that is the fact that that massive spending by the hyperscalers, and with Google and Meta and Microsoft and Amazon, especially some of them just blew out guidance, and that all translates into more data centers, all sorts of things, and more energy projects. So that does bode well for Quanta Services and the heavy construction firm. There's a lot of stocks in this group that are doing very well. So want to see how that goes. Just see that people are expecting pretty solid growth for an extended period of time, and just want to see more confirmation of that. But that's one of the strongest areas in the AI trade is all these AI infrastructure names to various things, and this is a big part of that.
Yes, and if you want to get some more information on the hyperscaler capex things, IBD video producer Claire O'Connor did a great wrap up on some of the Mag Seven earnings and what that means for names like Quanta Services. But here, looking at the chart, we can see again heading. Looks like it hit a new intraday high here on the 12th at 543. But again, pretty extended here from anything right now. So, what are your thoughts on the chart?
Yeah, I don't think there's anything you can do with this. It's above the buy point, it's clearly extended. It's sort of extended even from that sort of messy area that it sort of punched out of, last week. So, from there, it definitely seems out there. Have to wait for another setup, and it may be a while. I mean, this one does have some chunky stuff, and you can see that, it's there's been some volatile moves. If AI sells off, this is going to sell off. This is going to sell off. I mean, if AI plays all generally do, we know that. So I don't see anything going here, but it's important for a lot of other names. There's some of those are closer to buy points. Actually, stock of the day for Thursday is another breakout. That's Road. That one broke out on. Of course, that one just had earnings fairly recently, for ROAD, and that one. So that's another name. So other names in the group it'll be interesting to see. It may have some influence on names that are closer to being actionable, but this whole sector is something that investors should be looking at for quite a while.
And just again, transitioning to the weekly chart here, Ed, again, we see pretty solid fundamental EPS rating of a 98, accumulation distribution rating of a B, composite rating 97. So again, a lot stronger fundamentals here for Quanta Services.
Yeah, and there should be, the backlog gives you confidence, and that's one thing, right? That'll continue. Revenue growth is supposed to slow. That's sort of a weakish quarter for power, but then it's supposed to pick up again. So I'm not sure what happened there. There was a big number the prior year, so we'll see. But then, is revenue growth going to slow to the low teens or low single digits, or is it going to hold up more closer to 18%, 20%? I think those are the kind of things for this quarter and going forward that people will be interested in. If there's all this massive spending, they want to see some pretty rapid growth from these names as well.
All right. Well, those were some of the big names on our radar, but of course, there's always more. So let's take a look at Palo Alto Networks due to report on February 17th. And again, we've seen, software related names take such a big hit here at the beginning of the year. Palo Alto is certainly fitting that bill. Hit this high of 223.61 back in October, but it has slid since then and well below key moving averages. So what would be important here to follow from PA&W earnings?
We want to see some things that, confidence that things are going to get better. The problem is that nobody fears that AI hit last quarter, these companies. Nobody fears that it's really going to happen this quarter. But, so it's hard to know what they can say that can make people feel better, because it's like, well, how do you stop this? It's going to be a matter of convincing people, assuming that's true, that, these incumbents, there's reasons why they do that. You don't, a lot of people could do knockoff software on these things, but there's a reason why they haven't necessarily come in, taken over. I mean, but yeah. Also, if this one pops on earnings, don't get too excited. I mean, you can buck a trend on strong earnings, but if the trend is weak overall, that can just roll right back over. We've seen that with a number of firms in this space. So yeah, it's going to take a lot, and I don't know what they can say that will change the tide in the near future.
All right, how about we jump to Cadence Design Systems? That's ticker CDNS. Earnings there also on February 17th. And again, this in a consolidation with a 376.44 pivot, but another one that's been kind of in a downtrend here, Ed. Another computer software design name, again, below all the key moving averages. So again, thoughts with CDNS.
Yeah, I mean, it's in a good should be in a good space in the sense like it's designing electronics and chips, which and chips are doing pretty well. But it's also the growth has been slowing a little bit. There was a strong area, now it's slowing a little bit. So those are some concerns. Last few quarters, and it's supposed to slow in 2026. So yeah, we'll have to see. And obviously, it's just well below these things. How can you convince people more than just one day, more than that, forward looking that long term threats aren't there? And I don't know what you can say.
All right. Well, how about we shift gears? Let's look at Pan American Silver earnings there due on February 18th. And again, we've seen precious metal names doing really well, pulled back recently. But again, Pan American Silver, even though it's off these highs of around 70, just trading just below the 21-day line here. So, what are you looking at here?
The thing is that these move more on prices than the earnings. I mean, they could say something disastrous, but about something about a particular mine, but or you can outperform. Oh, we really did this or that kind of thing. But earnings are interesting. They do move stocks, but so much is the price. And the moves that have happened the last couple of weeks are because of sell-offs in silver and to a lesser extent gold after enormous moves. So don't get me wrong. So that's what it's going to be about. Could there be a bounce off the 50-day line again? But yeah, but you don't know, will that last? There's just a lot of things going on that are driving gold and silver prices.
So if you're looking at this, then do you look at a bounce at the 21-day maybe to add a position here, or what would you like to see set up to uh, encourage some sort of entry?
Yeah, I mean, maybe a bounce off the field line, but I've just not played gold well at all. I just generally stay away because I don't have any real confidence that these names will do well. I mean, you can try you can try minor ETF or a gold stock or ETF or gold ETF, thing, but those have the same similar issues. Obviously, been huge winners, but they've been very volatile lately. I don't really like the space right now for that reason.
All right. Well, how about we look at Kinross Gold earnings there on February 18th? Another one here at a sort of similar action, peaked at this 39.11 level on January 26th. It's pulled back, but again, holding or trying to find support here at the 21-day.
Yeah, I mean, this isn't as volatile, but that's gold is less volatile than silver lately. So there's that, and that's probably really the big thing. But it's had a big run. Yeah, it's not breaking down like but it has just these really big swings.
All right. Well, how about we look at John Deere earnings there on February 19th? And again, Ed, we saw this with Caterpillar a couple weeks ago as they were reporting earnings, but we see these kind of industrial plays that have now become AI players, John Deere as well, having this excellent move here out of this consolidation with a 533.78 buy point. It moved out of there on January 29th, and it's almost gone vertical since. Definitely extended, looking maybe to hold at the 600 level. But give me your thoughts on John Deere.
Yeah, big run. Earnings are supposed to turn around maybe later this year and then, in fiscal 2027. But it's come down. It's like it's had a couple of, this is supposed to be the third straight fiscal year of declining earnings. And so people are betting on a turnaround. Well, that better be coming. And so it'll be interesting to see their comments about agriculture too. That could be important for a lot of other stocks in that group.
All right. Well, how about we wrap up with a look at Coco Vita, which also posts on February 18th. And I feel like this is a name that's been coming up. They manufacture coconut water, milk, all those things to keep you hydrated. This one here, again, looking like it's just trading above maybe some recent ranges here above the 56 level. But again, thoughts here with Coco Vita or
I
Vita
mean, it's a
Coco.
bit, yeah, it's been a little bit messy here, but yeah, getting above those areas, bounce off the 50-day line, sort of provide an entry. But now there's earnings coming up, so I mean, maybe there's going to be something available after that. It has had solid growth. I mean, that's been pretty consistent, and the last quarter was pretty strong. Accelerating there. So we'll just have to see. But yeah, I think this one looks interesting.
All right. Well, Ed, thanks so much for your insights today. We really appreciate it.
Thank you.
All right. Well, that wraps it up for this edition of Earnings Cheat Sheet. If you want more market analysis, be sure to tune into Stock Market Today. That goes live after the closing bell. And thanks so much for watching. We'll see you right back here next week.